Welcome to Trading Lounge and the US indices for Tuesday, September the 14th, starting with the Russell here. Now with the Russell, I don't know if it's got time to complete to the upside in line with the SP500. And what I mean by that is that we could look at it as 1 and 2 here, and 3 here and 4 here, but then we've got overlap here. So we could have sort of some 5-wave move here to finish this off as wave 5 of 3 here, because this is what we're looking for with the S&P 500. If we don't have that, then all we're going to see here then is that we would need to treat all of this across here, because we haven't made a new high here. We need to treat that as the A wave here, and then this is an A and a B and a C for the B wave here. And then all of this here will be wave 1 to the downside, going back for wave 2 in 3 waves, and then 3, 4 and 5 over here. When we look at this is very similar to the S&P 400, so this is the 400 here, and you can see that we've had the tops over here, and it's never really, well, it's given us a double top here. We can count 5 waves up in this little move here, a little bit dodgy, I understand that, but it's difficult to look at, I mean, like logically I'd look at this as wave 1 and 2 and 1 and 2 if we were in a bull market, and then going up for 3, 4 and 5, all of that. But we also need to look at all of this as the A wave here, and A, B and C for the B wave here, down for 1, back for 2, down for 3, 4 and 5. So we can't rule that out here. So the S&P 400 and the Russell and other stocks that have got this other indices, stocks that have got this certain pattern here, you just need to be aware that they could collapse, because we've been looking at US stocks to give us a bit of a count to the upside. So in terms of timing to the upside, what I'm going to show you now is a conservative count for the markets to the upside. So this is Facebook here, just to give you an idea. We've got wave 3 here. This is a tick chart, 100 ticks. So we've got, these are the days across the bottom here. So basically all I'm looking for is wave 1, 2, 3, 4 and 5. Will this reach 400? I don't know, but we're just tracking 5 waves up here. So this should move along quite sort of comfortably in its own time, you know. As you know, I was looking towards the September Equinox for this to take high in here. So this should move, some stocks like Tesla are in the same situation, but Tesla might move quite quickly, or maybe move above 800, where this one here might be sort of, you kind of got Mama Bear, Papa Bear and Mama Bear, so to speak, So Facebook is kind of Mama Bear, really, the sort of moving along, and Papa Bear would be like Google here, where it takes a lot of time to get up here, so we need to take the speed of all of these wave 4s that we're looking at to wave 5s here, but we're pretty clear that we won't be far off with these tops being in play and then having a wave 4 here. Not that wave 4 is the end of the world, but it does finish off the trend that we're in, and that's kind of what we're looking for. So when we're looking at the NASDAQ and the S&P, we're also looking at going from a certain degree of wave 4 to wave 5 here. It could be slightly different, but that's the kind of thing that we're looking at. So when we look at the Russell and the S&P, I don't know if they're going to make it or not. The S&P 400, that is, So with the NASDAQ here, just on the 4-hour chart, this is what we've been looking at here, where we've got this wave form 1 and 2 here, and 1, 2, 3, 4, 5 for the 3rd wave, looking for the 4th wave to come back, and then the 5th wave to the upside. I mean, how long will that take? I mean, as I mentioned, we're looking at the Equinox, which, depending where you are in the world, so for US stocks, so we'll look at the 23rd of March for that. So that's sort of 23rd of September, sorry. This is way over there for that, so we can put that there. And I'll just put that horizontal line in there, 23rd of March. So that's what we could sort of potentially be like considering, Yeah. So with stocks, if you watch the stock video today, you'll see that in a lot of cases we're looking at this as a wave 4 and moving up to wave 5. So we need to build some evidence for that. So we need the first impulse wave off the low for this. If I just cut straight through to the chase here and go straight to the tick chart. I'm not sure if I've updated it or not, but okay, so rightio. So I was looking, well, we know we've got we're looking at wave 3 over here, and then I was looking at this here as an ABC for the A wave here, and then ABC for the B wave here. I knew that it was corrective, as I mentioned yesterday, because of this 3 wave move here. It's not like we got 5 waves down for wave 5 here. Unless we sort of bring it over here, then we've got overlapping wave structures, so it's not the case. So we knew that we were corrective, and then we will just needed to count 5 waves down here. So I've got it as 1 and 2 here, and then 1 and 2, and then the 3rd wave all the way down here. I've got the 4th wave, yes, it overlaps wave 1 there, so yeah, what to do about that? I mean, I can only move to the next logical, take to the next logical step, but yeah, anyway, that's the weak point in this. And then wave 3 or 5 and 4 and 5 here. So it may be that we have another one down. Do you know what I mean? We could do that, have another one down before moving up. But we're pretty close. I think that we're okay, you know. So the markets look like they want to sort of start impulsing to the upside. So we've got an impulse wave here, then we've got 1, 2, 3, 4, 5. So we've got 1 and 2 here, then 1 and 2 here, and then 1 and 2 and 1 and 2. So we're kind of heading in the right direction. So all said and done, if I just take, if we're worried about another structure coming down there, if I take the top of that and the low here, then that would give us wave 4 at this point here. So that would be the 38.2% retracement level. This wave 4 was quite high, so we could, you know, if this was going to be a wave 4 here, then we could take it to the 15,500 at that point, but we wouldn't want to take it any further than that. So what we could say as a safe trade to the upside, we could look for a classic trading levels pattern here, the arrival, the reaction. We are at number 5, second strongest number, and it has tested here as the resistance. So for it to you know, become support here again, well, then that would be a change in trend at that point, wouldn't it? So we can go long at that point. If you went long here at the moment, then the stop would need to go under, because that's the first 5 waves there, the stop would need to go under that low there, because if that's breached, if that low is breached, then that's if you wanted to get in here somewhere, you know, then you'd need to go there at minimum. But let's double check that before I open my gob. Yep, that should be right. Unless that's 1, 2, 3, 4, and 5. Possible, but then wave 4 comes to close to overlapping here. So looks, yeah. Anyway, that should be okay like that. I mean, I do like to put the stop sort of under the low here in these cases, but the other way to always do it as well is just, if you don't know the count, is take the bottom, take the current top, look for the 61.8% and shove it under that, you know, because that's the worst that can happen, you know. It could go to 78.6 and take you out, but generally speaking, and that's okay, because we can see that all of this block here is where, you know, a lot of volume came in. So that's the support. So that's the NASDAQ, and in line with the NASDAQ stocks, that I think that this is wave 4 low in place. And to go long, the safer trade would be having a classic trading levels pattern sitting on top of that 500. So the arrival, the reaction, the first high above the level. You have to be patient. That's your reference point, so you can go along at that point. You can get the second high if you're lucky, and then you can also get another classic trading levels pattern all tied up in here. So this bigger pattern here will be tied up in this smaller pattern here, and you can work that. And then you can work the levels there as well. I didn't sort of mention that, but 500, then you'd have 10, 20 and 30. So that's all of group 1. So a tested support on top of 30 would sever the market being pulled back to the 500 at that point, and then you'll be looking at the midpoint, which would be 50 at that point. And you can look to add on top of the 50 as well at that point with another pattern. So that's it in a nutshell for the NASI stocks and the NASI and a few stocks that we looked at, and the S&P, this one here, just on, look, first of all, I've got a account that can take us much higher, but all I wanted to do, because of the stock market, the stocks, I wanted to respect the stocks, and we've got this count here that does that. But what we'll do at the end of the day is that we will look, if this is correct, that's step 1, and if we start to see the market go up, in this case we could use 4,500. If it found support on 500, then it's highly likely we're going to continue, and we'll go up to 600 or maybe even 650. All right, the lower end of group 2 of 800, so 4650, 4720 and 8 here. So but what we'll do is we'll just track 5 waves up here, right, somewhere up here, and then when we get to the end of the 5 waves, we're just going to chill out for a bit, and if we get 5 waves down here, depending on the size of it, then we'll know that we'll get another 5. So we'll just look at to see, you know, we can short it through here. That's not the problem. The situation is, though, is that we just need to be a little bit careful, because we would be trading against the trend if we were short. And then this, if we get 5 waves here, and then we get 3 here, and we get 5 here, we should be sort of okay. But if that top there is breached, then we need to, without thinking, be long at that point. Okay. So we can be short and we can build in, but even on the short side, we'll look for that 5 waves down here, and then anything under that 5 waves, then we can add to the position on the short side. But at the same time, we have to protect this first position if we short through here somewhere. So don't make this trade the end and be end of all and think you're going to make a fortune and you're getting in at the right time. We need to work it so a little bit in here, because, you know, we could probably get that out at break even or small loss or a small profit. So you don't want to make it big. It's just to sort of give you a bit more space to add a larger position here in terms of initial exposure on things. So yeah, and then if that low is breached, then we can go from that point. So there's a lot of work to do to get it right in the turn. So first of all, we have to confirm it, and it's step-by-step process. So what I want to say is that I don't know if this is the top. Picking tops and bottoms is dangerous business, but based on stock, we can have something like that. So we will be working it. Be it right or be it wrong, I don't care. That this is what we're going to be doing. We're just going to be working it here. So I don't care if I'm wrong and I don't care if I'm right. I'm just taking the next logical step, that's all, okay? So it's not a matter of being right or wrong. It's best not to think like that. It's just best to think to take the next logical step and manage your risk and your exposure. Okay, so that said, this wave 4 coming down through here, I could also look at it as a wave 2 as well, which would take us a little bit higher. So if I just go to the 4-hour chart that we were looking at yesterday, I think. Yeah, so not to sort of worry too much about it. We know that wave 4 is overlap wave 1. Right, but this is the sort of stuff you get at the top of the trend, so you just need to be very careful. But anyway, the most conservative count is that we're just looking for 5 waves, so 1 and 2, and sometimes the 3rd and 4th come across the top here, and then the 5th wave up into this point. So we're just looking for that. And then if we need to build on top of this, like I said, we need 3 waves here, so we can build on top of that. But all we can do is trade to this 5 waves and get out. We can look to short through through here if we want, if we get a clear 5 waves here. But then in the bigger picture we would need to see 5 waves down like that in the bigger picture, but then we'll get 3 waves taking us back to the 50-60% mark and then moving down again, and we can short through here. So it's no point in shorting down here for this. So if we can get a position here, then we can also get a position on that breach there, and that will come around and get us back over here, and then we can get one here as well on that. So it's just a matter of building in very small positions, and once we're sort of on our way, and you know, as I mentioned yesterday, well, just to go back over this, is that when we're looking for 5 waves, sometimes we get really sort of lucky and we just end up seeing, you know, 5 waves down here, and we get this sort of nice impulse wave here. The other way to get it is that we get wave 1 down, wave 2 back, and then wave 1 down and wave 2 back, wave 1 down and wave 2 back, and then it starts to look a bit weird, you know. And then when you get this sort of pattern, you get that sharp drop at that point, you know. So yeah, we just got to be mindful of that. I mean, this is going to happen within here anyway, but sometimes it can really bunch up and play out like that, so we just need to be a little bit careful of that as it plays out. So we'll be aware of both patterns as they unfold. Yeah, but that's sort of where we are. So step 1 is, let's see if we get a rally up here. I mean, we do need to be careful that, you know, I've counted it down as an A and a B and a C pattern here, which fits quite nicely. If you can see from this point, we got 1 and 2 and 3 and 4 and 5, and then we can look at all of this as 1 here. But as always, we just need to be a little bit careful, because it could be viewed as 5 waves, and I've tried to do that here. This is just 10 tick charts here. So in this case, I've tried to view it as wave 1 here. I won't go all over that again, but wave 2 here, then 1 and 2 and 3 and 4 and 5 here for the 3rd wave, the 4th wave and the 5th wave. So that counts quite nicely, you know. So we need to be mindful that we just don't get an ABC pattern to the 4,500 here. So we need to be, we'll see this tomorrow, that, you know, we need to see, we could get something like that based on that. So it is possible to count this down as 5. I know there's overlapping wave structures here for this, so that's why it doesn't fit that well. There's a few other issues with that, but just as a general shell, and looking at both sides of the coin is not going to hurt us. We don't want to be negative towards opinions as such, but they are just opinions. So we need this classic trading levels pattern sitting here for this. So the arrival, the reaction, the first high. But once we've got that first high above the level, then you can go long from that point. Of course, you can move in earlier. We've got group 2 here, so you could move in on that, which is not such a bad idea. So we've got 80 here. Then we've got 65, which will be this little 65 there. So close enough. And 72 in there, so that all of group 2 there. So if you can see that, well, you can see here at 65, it's just, it had the arrival and then it found support here, very minor, but getting support on 65, the beginning of group 2 is like, well, that's the first step, you know. That means you're leaving this number here, the midpoint down here, which is where the low is. So yeah, so it's all good. So this hasn't been, the 72 hasn't been tested yet for this, but yeah, you can build a trade in through here. Let's just get rid of this for a moment and just go to the 100 ticks here. So that was 10 ticks we're looking at. This is 100, so a different picture here. So in this case, I've just got it as wave 1 here and wave 2 here, but we've been looking at it also as wave 4 in line with stock, so we can do that as well. Not a big deal. We're not really sort of interested in that, but yesterday I think that we're counting down here. I think I don't know where we're up to. We had the A and the B probably, and then 1 and 2 here, and 1, 2, 3, 4, 5 for the 3rd wave, 4th wave and 5th wave. So anyway, calling that low in, but the market's moving up quite nicely now for that. So yeah, let's just see how that goes. So you know that the problem here from the top to the low here, roughly speaking, this here, the 50-60% retracement level, that's going to be, if it's going to fail, that's where it's going to fail from. Okay, so you know that. So you can see how long this took here to become, from the support to become the resistance here. It's quite some time. So that could mirror itself back over here as well. So just be mindful of that number and that space there for that. But everything said and done, we'll be looking up at 4,600 to 4,650. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.